Well known as one of today's most successful stock traders and a seasoned Wall Street veteran with more than 30 years of experience, Mark Minervini is truly a trader's trader. Winner of the 1997 U.S. Investing Championship with a 155% annual return, Minervini has rightfully earned a reputation for being one of the industry's top trading educators. Mark is a trading legend and believes that through quantifying and breaking down every last detail in a trading plan, you can achieve stratospheric returns. He has been featured in Jack Schwager's Market Wizards book series. Mark credits his success to his methodology, discipline, and mental strategy. In fact, in his new book, Think and Trade Like a Champion, he goes deep on the psychological pressures faced by traders and investors and how to overcome them. His message is that focus and risk management are just as important as good stock picking when it comes to being successful in the stock market. Unlike traditional money managers who believe PEs should be low, Minervini actively buys high PE stocks, as this is where the momentum and growth are. Looking back at all of the stock market darlings, they all traded on ridiculously high PEs at some point, allowing traders to make extensive returns. How he does this is outlined in his books. Like his first book, Think and Trade Like a Champion book also starts with a great introduction that will supercharge your motivation and trading mindset. Persistence is more important than knowledge, and victory comes to those who persist, as long as you are learning from your experience. This second book reveals, even more, the astounding degree of professionalism Mark Minervini puts into his trading. You often hear about always having a trading plan. Well, Mark even has a disaster plan in case something totally unexpected happens, like a huge gap down, a power outage, or if the internet goes down. Evaluating all the different possible scenarios and knowing what you will do in each scenario will allow you to act rationally when under fire. When it comes to behavior and mental control, the bottom line is that if you think you can't do something, then you are right. You won't be able to. The real key is that humans can only perform up to the level of their self-image or identity. So, the general rule of thumb is, regardless of your skill or ability, you're not going to outperform your self-image. Whether you're aiming to become an Olympic skier or a stock trader, you're going to have to learn how to perform under pressure. You may do well in practice, but when it comes to performing under pressure, you'll only be able to go as far as your level of confidence. If you don't feel that it's like you to win, if you don't feel that you can be a great trader, if you don't believe that's your identity, it doesn't matter how much ability you have. You're going to cap out at your self-image. That's what people ignore because it's buried in your subconscious and you may not even be aware of it. The key is to build your self-image to a level that is at least equal to your ability. When things are calm and you have time to think, you are operating from your conscious mind. But when the pressure is on and you have to operate very quickly, you revert to your subconscious or your intuitive mind. Your conscious mind makes decisions slower and can only focus on one thing at a time. But when you let your subconscious mind take over, you operate intuitively, and the self-image is the gas pedal, and that's what guides how well you perform from that point. It's not magic, it's simply the science of how we operate as humans. There are two types of traders inside everyone. One is the builder, who is disciplined and focused on the process. The builder wants to perfect their craft and trusts that results follow the successful execution of the process. Mistakes are viewed as valuable feedback in order to learn. The other trader is the wrecker. They are ego-driven and very fixated on results. If they get it wrong, they find someone else to blame. This trader looks for excuses and rarely succeeds in the long run. The goal of a stock speculator is to be prepared at all times, and the best way to do this is to create what-if scenarios and responses. What if your internet goes down? What will you do? Where will you go? Mark gives an example of his brokerage firm going down system-wide, and he now keeps a funded second account so he can short against his longs should he need to. Disaster plans may seem silly, but having one can avert disaster. What would happen if you woke up and as you were drinking your coffee calmly by your desk as you realize your biggest position has had a massive profit warning and is gapping down 30%? Gap downs are not nice. Not at all. Nothing major has changed in the stock market, and nothing is going to change meaningfully. Certainly, nothing has changed when it comes to risk. You simply must manage risk because it doesn't manage itself. Staggered stops simply break down a stop into multiple stops at different price levels without risking any more than you would with the one stop price. If a stock or the market is volatile, you enter a trade and set an 8% stop. You can maintain the same level of risk by setting a stop on half the position at 6% and then putting the other half at 10%. What will happen is that you'll choke off 2% on the front half, but you'll give it 2% more on the back half, and maybe give yourself a better chance of staying in a portion of the trade. It's a trade-off, but when there's a situation when the market is volatile, especially at the beginning of a new bull market, I don't want to get knocked out of an important stock. I'd rather have a half position in an important stock than no position at all. So, I'll give it a little more room on half by breaking the stock up. And you can break it up into 3 or 4 stops if you want. The important thing is to bracket those stops around the percentage number that you want to end up at so that it averages the risk you are willing to take. This is a book to read, reread, and reread again. It is essential for anyone who wants to make serious money in the stock market to learn from someone who actually has made serious money in the stock market. A lot of people are teachers and not traders, and all of the academics who preach that the stock market is efficient never beat the market mindset. What is your opinion about Mark Minervini? Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Hit the bell icon for more updates and notifications. Stay safe, and we will be back soon with another video.